Welcome to the Robert Wenzel Show. Please stand by for Robert Wenzel.
Hello, everyone. Welcome to the Robert Wenzel Show. I'm Robert Wenzel. My guest today is Dr. Robert Pozen. He's written a new book called Extreme Productivity: Boost Your Results, Reduce Your Hours. Dr. Pozen taught a full course load at Harvard Business School while serving as the full-time chairman of a global financial services firm. He's written 6 books and hundreds of articles. In addition, he is currently a senior lecturer at Harvard Business School and a senior fellow at the Brookings Institute. He was chairman of MFS Investment Management and vice chairman of Fidelity Investments. He served on President Bush's commission to strengthen Social Security and was also Secretary of Economic Affairs for the Commonwealth of Massachusetts when a name you might recognize, Governor Romney was governor of Massachusetts. He was an associate general counsel at the U.S. Securities and Exchange Commission and was a partner in the Washington, D.C. law firm of Kaplan and Drysdale. Dr. Pozen, welcome to the show.
Glad to meet you, and you can call me Bob. Let's be more informal.
I can go with that. It does sound like you've had a pretty busy life, and now you've got a book out telling us how we can keep up with you. I found your book fascinating in a number of ways. First of all, from your method of handling emails. Can you talk a little bit about that?
Everyone feels overwhelmed by emails, and I have a 2-stage approach. First is that you ought to eliminate automatically, just delete over 80% of your emails because they're not worth reading. And you can tell from the little tagline because many of them you're just getting a standard response or you're getting part of a mass email. Then second of all, and this is important, the 15 or 20% that are really critical to you, respond then and there and don't wait. Most people will have an email that's, say, from a regulator or their boss or somebody, and they'll say, okay, I'll wait another day or two or maybe a week to respond to them. When you do that, you create problems for yourself. You may forget that email, or when you find out that you then have to respond to it, you'll then spend quite a bit of time trying to find that email again. So it's very inefficient. I call that Ohio. Only handle it once. Ohio. And that has proved to be a big time saver for all the people I know who have adopted my suggestion.
Okay. Now, I'm really interested in learning about your rules for managing a travel schedule. I travel fairly aggressively, so help me out. What should I do to make my life easier there?
I'm sure you do this, is I never check luggage. You know, I find the bag that's the biggest and fits and get all my toiletries and other things in a little plastic bag that I do. But then beside my roll-on, I don't carry a briefcase because I find a briefcase is very heavy and it doesn't carry that much. So I carry a canvas bag, like the big bags that you would take to the beach. They're very light and they hold a lot of stuff. Another thing is I always carry with me a blindfold and earplugs because I find that it's important if you want to sleep on planes or trains to create a cocoon-like atmosphere. And if I can go into the window seat and put my blindfold on and earplugs, I can go to sleep very easily. And then on planes, it's important try not to drink liquor, but instead to drink a lot of water because you dehydrate very easily. And last thing is jet lag. We all have problems with jet lag, and my approach to jet lag is to try to get into the time zone where you're going the day before you leave. So, for instance, if you're going from New York to, say, Frankfurt, and that's a 6 or 7 hour flight, and if you get on the flight in the evening, by the time they finish serving dinner, you've used up 2 hours of the, say, 6 hours, and it's very difficult to sleep. So my approach is this. On the day you're going to fly to Frankfurt, get up at 4 a.m. in the morning and start to get into the time zone of Europe. And then before you get on the flight, have dinner an hour or two before you get on the flight. And so when you get on the flight, it's for you already nighttime, and you immediately put on your blindfold and your earplugs and go to sleep as soon as you get on the flight. So that gives you a chance to get a full 6 hours of sleep, and when you wake up, you're more or less in the time frame of Europe.
Okay, Bob, this interview is going to be very valuable because you also have a section called Improve, where you talk about reading comprehension, writing abilities, and effectiveness in public speaking. That's where I really need help. So what should I be doing there?
Well, each of those is a big subject, but here's the basic learning in each area. In reading, I'm against the idea of reading more words per minute. Most people say, I want to become a faster reader by reading more words per minute. That's the old Evelyn Wood approach. To me, I want people to read fewer words, but the most important words. And the way you get there is to figure out what's your purpose in reading. When I'm reading the Boston Globe, I'm only reading it for sports and local events. So if I come to an article on financial matters, I'll wait and won't read that because I'm going to read the Wall Street Journal. If I come to an article on national politics, I won't read it either because I'll read that subject in the New York Times. So you've got to be really clear about what your purpose is, and then when you start reading, you read the introduction and you should jump right to the conclusion. A lot of people just read logically and chronologically, but it doesn't really get you there. If you read the introduction and the conclusion, you'll know where the article is going and how it's organized, and then you can be a lot faster reader. On the question of writing, the biggest thing I see is that people do not compose outlines before they write. Then they get lost in the middle of what they're writing, or alternatively, they get to the end and they say, now I figured out what I want to do. So I'm a big believer in outlines, and then if you have anything that's long, you write an executive summary. I don't know whether you want to go into public speaking.
Yeah, just briefly on that. Go ahead.
Well, my view of public speaking is the key learning is don't write out all the text of your speech. Write the first line out and the concluding line, and then have an outline. If you write out a speech, you're going to tendency to want to read it. That's very boring to the audience, and the audience may be very different than you anticipated. So just have an outline that gives you the flexibility and that helps you respond to your audience.
Okay. Now, in one part of your book, you mentioned that you take a nap daily. Now, I'm tempted to ask you if you follow that rule when you were at the SEC, but I won't. And just tell us overall what your thinking is on taking a nap.
Well, most people sometime during the afternoon reach a low point, and they also then drag for the rest of the day. If you can take a 20-minute nap or a 25-minute nap, you can re-energize yourself and become much more productive for the rest of the day. I've been doing this since I was in graduate school, and I did it, all along. Some people say, well, how do you do it? Because if I start to sleep, I'm going to sleep for a long time. Well, just set an alarm. That's very simple because it's the first 20 or 25 minutes that gives you the big re-energization. You don't need anything more than that. Other people say, well, I don't have a couch in my office. The answer is you don't need it. All you need to do is put your blindfold on, your earplugs, put up your feet, and then you got the little cocoon and you can go to sleep. And I find, and I think other people have adopted it, that they're much more productive for the rest of the day if they take this very short nap.
Yeah, and I found it interesting that in your book you say you don't eat lunch out at restaurants. You just bring a sandwich and eat right at your desk.
Yeah, I think most of the time, unless you're entertaining a client out or you're trying to have a reward somebody like the 5th anniversary of being with your firm. I mean, otherwise I just eat a sandwich at my desk. If I have a meeting, I ask these people what sandwiches they want, and it's simple, keeps your weight down, and allows you to be productive. If you go out to an elaborate lunch, it may take 2 hours, and at the end you feel very satiated and, not very productive for the rest of the day.
Okay, lots of important information on being productive in Bob's book, which again is called Extreme Productivity, Boost Your Results, Reduce Your Hours. But Bob, seeing I've got you on the phone here, and that you were on George Bush's committee to save Social Security, I have to take the opportunity here to ask you a little bit about the Social Security problem. Now, in doing some research, I noted that you see the problem with Social Security, coming down the road probably 30 years or so. Is that correct?
Well, we're already in a cash flow negative position, meaning we're running a year-to-year deficit in Social Security, and sometime that's already true, and sometime around 2035 or 2006, if we do nothing, the system's going to go bankrupt, which means that everyone's automatically going to lose 25% of their benefits. So I think we ought to act now to avoid that, but we have to act in a sensible way. And that means, first of all, don't touch anybody's benefits who's 60 or over. And second of all, we need to do it in a progressive way that recognizes that higher earners now have 401ks and IRAs as well as Social Security. So my proposal is to take all those things into account.
Yeah. See, I want to get back to the point about Social Security now being cash flow negative, because I don't think people understand that. What's really happening now is Social Security is going to the Treasury and attempting to redeem some of their bonds, and the Treasury doesn't have the money, so the Treasury has to go out and just borrow that money to pay Social Security. Am I correct on that?
Yes, well, it's basically one part of the government owes money to another. There is a Social Security trust fund, but what's in there are special Treasury bonds. And if the taxes that come in from Social Security are less than the outflow, then it has to redeem those bonds. And so that's basically what happens. There is a Social Security trust fund, but it's not independently funded. It's funded by Treasury bonds.
Right. It's basically what happened when the money came in to the trust fund bought Treasury securities, and the government then spent the money that came in as a result of those purchases. Am I correct there?
Instead of funding it separately, it spent the money and Congress spent the money, and this was both Democratic and Republican administrations,
right,
issued special purpose Treasury bills and Treasury bonds to the trust fund. So the trust fund does have something in it, but it's essentially IOUs from the other part of the government. So right. As we wind down the Social Security, as the deficit of Social Security becomes greater on a year-to-year basis, we're going to have to finance it by redeeming these Treasury bonds, which means essentially that you have to have another part of the government pay for these benefits.
Right. And basically, the way I understand the trust fund is saying, although it's roughly around $60 billion or so in the next few years that the trust fund will have to go to a Treasury for money, that in the year 2018 and beyond, the numbers get much more significant, and then we start to really get into problems.
The demographics are getting worse and worse, and so the trust fund is depleting every year. And by the year 2036 or 35, people make rough estimates, then we're really going to be in trouble. So the solution is to do something now that phases in gradually over a number of years. When Social Security was started, there were no 401k plans. There were no IRA plans. So what we ought to recognize, in my view, is that Social Security is critical to the lower earners for whom they don't have almost any IRAs or 401ks. So we ought to maintain the current schedule for those people. But for higher earners, we can continue to grow the benefits of Social Security, but grow them at a slower pace than in the schedule. And if we grow them progressively at a slower pace, we can cut the long-term deficit of Social Security, which is now about $8 trillion. We can cut it down to about $4 trillion. And that will really make the program a lot more workable. We can also obviously do other things, such as move the retirement age back slowly, and we can also change a little the payroll tax. So we can do these things modestly and put the program onto a sound footing. But up to now, the political issue has been so hot that people haven't been willing to address it.
Yeah. Well, as far as the lower income people, don't you think it would make more sense to allow them to invest their money on their own, and then it would go into banks that would loan it out, and the banks would sort of act as the professional allocators of capital, or if people want to put it in stock market and mutual funds. I mean,
Okay, there are two different types of private accounts. You're describing what's called a carve-out private account, where you would take some percentage of your payroll tax and be allowed to invest it. That proposal was made by George W. Bush. It's been roundly criticized, and I don't think it makes a lot of sense. You'd create a lot of small accounts, and there'd be no collective investing. I think what would make sense is to, and you're also taking money out of the Social Security program, and we need to put more money in the Social Security program. So what I would suggest is that we continue to have Social Security as it is. We change the schedule, and we beef up the ability of people to have IRAs. IRAs are private accounts. We don't need to create a separate set of private accounts. So these are what are called add-on accounts. And I'm in favor of add-on accounts, but I'm not in favor of carve-out accounts for the reasons I stated.
Yeah, I see it different. I mean, basically, for all practical purposes, my understanding of a Ponzi scheme is when money comes in and money is paid out to earlier investors from the money that's coming in. And that's basically what's been going on with Social Security.
I don't think it would be fair to call Social Security a Ponzi scheme.
Why is that? But isn't that what's been going on?
What has been going on, as I explained, is that there's a trust fund and there are treasury bonds in there, which means that the government now has the obligation to repay those bonds as they become due. And part of the general budget problem, but general appropriations problem.
Are you saying that if Bernie Madoff issued bonds from one of his other firms that didn't have any money, that would satisfy regulators?
If Bernie Madoff issued bonds that were obligations of the U.S. Treasury, well, they would get paid off sooner or later. The problem is here that Congress is going to have to appropriate the money as the trust fund winds down. Bernie Madoff is not. Your hypothesis was that Bernie Madoff would be issuing bonds to an entity that wasn't capable of paying them off.
You think the Treasury is going to be able to pay this off? You think the Treasury is capable without printing money or doing something without the Federal Reserve?
We do a lot of printing of money. So and we do a lot of things by printing money. So we're already printing money. That's what QE3 is. So if you're asking me whether it's a good idea for having this system where IOUs from one part of the government versus the other, if I had designed it originally, I would have designed it differently. But here, there is an obligation, and what it means is that long-term obligation to pay those treasury bonds in the Social Security system will now be part of the general budget problem and the general appropriations process. And that already is very burdened, so that's a difficult and bad thing. And what we need to do is not overburden what is already a heavily burdened budget system with Social Security obligations, but gradually find a way to make those obligations less onerous while protecting the people who need it most.
So are you in favor of the Federal Reserve printing money to bail out the Treasury if they're not able to go into the markets and get money at anybody?
I'm not generally in favor of that, but I don't think that that's what's involved with Social Security. Social Security is really involved with the appropriations process in Congress. Let's say we get to year 2035, where there would be an automatic cut of 25% in benefits if nothing else was done. Well, at that point, Congress would start, I believe, to appropriate more money to Social Security, and then it would compete against education, against highways, against defense, against everything else. And we'd probably have that come much earlier as people saw what was happening. So Social Security, the way it's structured, these obligations, if they're going to be paid, will be paid by Congress out of the budget and appropriations process, but it will be quite a burden on a process that's already quite burdened.
So it sounds like a mess, and I'm trying to think how this is a better system than if people were just allowed to invest the money on their own. They would not invest it in a way where they would just simply give it to someone issuing IOUs and having to be concerned about whether they're going to get the money back or not, versus investing it in mutual funds?
The group of people we're most worried about are people for whom Social Security is their only income. So we need to essentially guarantee it. They can't take risk. The group of people, remember, there are a third of the people getting Social Security whose average career earnings are like $30,000 or less.
Which boggles my mind. It boggles my mind why you're taking a percentage of their pay then to put it into a system where the government takes the money and spends it. And now we're at a situation where, because of the cash flow of the Ponzi-like payouts, there's no money there to actually pay these people back.
As I said, the money, they need a guaranteed, long-term guarantee. Treasury is really the only one that can give that long guarantee. And what we need to do is make the system different so the people who are in this low earner group, the system will be solvent enough to take care of them. But why are people who are making $90,000, $100,000, why are they continue to get growing Social Security benefits when they're already in IRAs and 401ks, which are heavily tax benefited? The tax expenditures for retirement are about $150 billion a year. So those people are already getting a tremendous subsidy from the government. And second of all, most of those people aren't really that interested in Social Security. For Social Security, that's a relatively small part of their retirement planning. So what I'm suggesting is a progressive solution by which we gradually slow down the growth of benefits for higher earners, and we protect the benefits of the lowest earners, and we do this in a way that it only applies to people who are younger, and we don't do this for people who are 60 or older. That's the way I think it should be.
So you're basically seeing the Social Security system is a wealth transfer system. Am I correct there?
Well, actually, it's not a wealth transfer system at the moment. It's pretty neutral.
No, but what you're advocating?
What I'm advocating is that it become neutral, because do you consider IRAs and 401ks a wealth transfer system? They are, because there's this huge tax subsidy that's being paid to those people. So that's a partially subsidized system. And those subsidies go to people other than the low earners. So actually, by having a subsidy in Social Security, that evens things out. So if you look at the overall retirement program, what I'm suggesting actually evens things out. It would make the system much less of a wealth.
When Social Security was initially proposed, was it proposed as a wealth transfer system?
No, when Social Security was originally proposed, they set the retirement age at 65 because they thought no one would live that long. It's really irrelevant what it was originally proposed.
Well, I'm just trying to get a sense for
how does it function now, and how does it function within the context of the overall retirement programs that are offered to people. Social Security in isolation, you need to look at it in terms of all the retirement programs.
So in a sense, the Social Security was even a bigger scam than a Ponzi scheme, because there was coercion involved, which forced people into the program. And you're now saying that when it was all structured, they set the retirement at 65 because they didn't expect to pay people out. So, I mean, it was just, isn't that theft?
It was restructured in 1983 to make it solvent. And so it clearly wasn't a Ponzi scheme. When they did the restructuring in 1983, they thought the changes that they made in the benefit schedule and in the payroll taxes would, in fact, make it solvent. But they miscalculated fundamentally, and therefore we need to restructure it again. Look, I don't want to, I'm not here to discuss Social Security with you. I thought we were discussing my book on personal productivity. You're entitled to your views, which are different than mine, but all I'm pointing out is that you have to take into account that Social Security is no longer the only government retirement program. We have lots of them. They're heavily subsidized, and we just need to put them all together.
I appreciate your taking the time on this. You were co-chairman of Fidelity Investments, and then you ran a money management firm that had $293 billion, or at this point has $293 billion under management. Are you saying even low-income people are better off putting their money with Social Security rather than with the money management firms that you ran?
I'm saying that if you allow low-income people have only the Social Security to live on. So they need that schedule, and they need it guaranteed. There's no mutual fund that can guarantee that you get returns. Second of all, if low-income people invest in mutual funds, which one are they going to choose? They might choose, say, the Venezuelan fund. They might choose a fund that's very risky. That would be inappropriate for them. Third of all, the average Social Security recipient gets about $1,200 a month. If you take a small amount of that, say $200, and you put it into an investment account, you'll have huge administrative costs to run such a system. And lastly, we can't afford to take money out of the system now because we're already running a cash flow deficit. If we wanted to have the sort of system that you're thinking about, we should have decided this in 1980. Unfortunately, now it's too late to do that sort of system and do it well.
It just sounds to me like you're advocating central planning for savings for poor people, which I think is a terrible thing. Why don't we just let them have the money and let them choose for themselves? I mean,
the philosophical difference is that there's both philosophical and practical issues. I'm explaining to you that practically it would be very complicated.
How would it be complicated if you just say, okay, we're no longer taking the money out of your pay, do what you want with it? How is that complicated? It seems simple to me.
The basic thing is, for these people who have no other retirement income, they need guaranteed retirement income. That's what they need. You
didn't have money market funds at Fidelity and MFS?
Saying they can take the money and put it anywhere they want. And I'm saying is, I think for those people, they need a guaranteed income.
So you're a central planner, Bob.
I have to go now, and I'm sorry that we disagree, but it's a reasonable disagreement.
Okay, thanks for taking the time. Take care. Bye, Bob. Okay, that was Bob Pozen. His book is Extreme Productivity, Boost Your Results, Reduce Your Hours. And I would like to thank him for being on the show. Let me bring in Chris Rini now for the wrap-up with Rini. Chris, what you think?
Very good interview. The productivity part I enjoyed. A few good tips in there, especially on the writing and reading. Obviously, the meat of the interview was Social Security, and not surprisingly, I'm in your camp. I personally am against forced savings because we're all different individuals. I have a different value scale than you do, than another employer, my neighbor. We all have different time frames and different value scales on how much we want to save.
Yep.
My neighbor may have a history of cancer in his family and has no interest in saving money for when he's 80 if he doesn't even expect to live that long. The way that I would help fix the system is to give the ability for young people to get out of it now.
Yeah, there's a couple of points I wanted to make with regard to Pozen's remark. First of all, he talks about the poor, but I think it's a terrible insult to the poor to say the government needs to central plan their savings. I mean, that's an insult. Just because someone's poor doesn't mean they're not intelligent. It just means they don't have as much money as Bob Pozen. And what gives Bob the right to tell a poor person how to put his money? In the free market, if people were free to put their money where they want, first of all, there would be salespeople all over the place explaining to people why they needed to invest. Secondly, money would go beyond treasury bills and actually into the economy, investing in commercial paper or stocks or whatever it might be. And it would actually boost the economy versus the money where it goes now. Actually, before it went into the treasury bills and the government just spent it. Now they don't even have enough to invest in treasury bills. So you have a situation where the money is just being handed out to earlier investors. And that's a Ponzi scheme.
I agree totally, and there's no evidence to think that government can run a forced savings system any better than it can run the post office, Amtrak, DMVs. We could name thousands of different examples.
Yeah,
and they spent the money. They take the money, they just spend it. And people think that there's some kind of security there, but once again, they trusted, the wolf in sheep's clothing, and sooner or later, they're going to find out the hard way.
I pushed Bob a little bit on the inflation thing. He didn't want to come out in favor of inflation, but he knows damn well that's the only way these treasury bills are going to be paid off. There's just no money out there for it.
Exactly.
Okay, that concludes Wrap Up with Rini. Thanks, Chris. We'll talk to you next week.
Great. Thanks again.
Thank you for listening to the Robert Wenzel Show. This is Robert Wenzel. Be sure to check out my website, economicpolicyjournal.com, where I blog 7 days a week about economics, finance, politics, and liberty. Executive producer of The Robert Wenzel Show is Chris Rini. Head of editing and mastering is John Daubert.